What's up, Rad fam? Welcome back to another episode of the Rad DAO podcast. Today, my guests are Sam and Ruan from the Seasonal Tokens, and they've created a basket of 4 different tokens that have their own halving schedules, much like Bitcoin, but they happen at different times of the year. The idea is that you can trade from one to the other to accumulate a larger position over time, but you can do it in a predictable way. They're mineable, farmable, and tradable. It's a really interesting mechanic that I haven't seen before, so you're not going to want to miss it. Stick around to the end. But before we get into it, I've got an announcement. The official Rad DAO Telegram group is now open, so you can join with the link in the description below and come hang out with the rest of the Rad fam. I also need you to make sure that you're subscribed to the channel, that you've liked this video, and that you've left me a 5-star review on your favorite podcast app. I'm Rad Dad, that's my cat, and let's get into episode 11 of the Rad DAO podcast. Let's go! Gentlemen, I'd like to welcome back Sam. You are the distinguished privilege of being my only repeat guest thus far on the podcast. So for the listeners that have been here since the beginning, Sam was on to talk about his auditing project a few weeks ago. But he's back now with Ruan, who has not been on the show yet. But today we're going to be talking about the Seasonal Tokens, which is a group of 4 tokens, all built into a unique ecosystem that I haven't seen the tokenomics like this before. So I thought it was a really interesting project. And both these guys are here to talk about it today. So, Sam, you've already had your intro on my show, but I'll give Ruan a chance to introduce himself and kind of just tell our viewers and our listeners, how did you get into Web3 in the first place?
Absolutely, yeah. So thank you very much. It's a pleasure to be here. And so I started off in physics, basically as a physicist. I moved into neuroscience and then into finance. And when I was in finance, I was working as a quant in the financial sector. So it was my job to try to look at prices of equities, stocks, and try to find like recurring, detectable, predictable patterns in the stock price movements, and then try to implement a trading algorithm that would be able to profit from those predictable movements in the prices. So that was what I was doing kind of professionally. And it was kind of when I was doing that, I realized that like what would be an ideal set of prices? What prices am I really looking for? And what I realized was that what you really want is you want prices with a predictable up and down cycle, very, very regular, very seasonal. If you have that, then you can trade them for profit. And it doesn't really matter what the assets are, whether they're commodities or stocks or bonds. All you care is that the prices go up and down in a predictable way. If you find assets like that, then you can trade them for profit. And at the same time as this was happening, of course, I was investing in Bitcoin. I was working in the financial sector. I had my Bitcoin investment, and I was watching every day to see, can I quit my job yet? Watching the price. And but at the same time, I was thinking, okay, cryptocurrencies, prices moving this way and that way. So what can I do? And what I realized is an ideal set of assets would basically have prices. You have like a collection of assets, not just one asset that goes up and down, but a whole collection of assets, so that when one is going up, another is going down, and then you can switch between the different assets, and that would be the way that you could grow the value of your portfolio kind of most efficiently. So, this was. I guess between 2012 and 2016, and Bitcoin was new, and there weren't really many other cryptocurrencies. And the idea of making a new cryptocurrency, I did have the idea of, well, we could make cryptocurrencies that did this. And I investigated how hard it would be. I actually made a prototype, but it was like, I forked the Bitcoin code. And the problem is that it's like 40,000 lines of code. It's horrifically complicated. So basically, I decided, okay, it's too complicated. We can't go ahead with this, because if I was trying to do that, I'd have to have 4 different peer-to-peer networks and 4 different copies of the wallet software. And you have to protect against 51% attacks, because with these proof-of-work currencies, if somebody else has more resources than you, they can kind of take over your blockchain and they can rewind it and undo transactions. And there have been a whole lot of attacks on other cryptocurrencies because of that. So I realized that, okay, I'm not going to spend a huge amount of money just so that I'm spending more money than anybody else is, on the mining power. To try to protect from 51% attacks. And it's basically not really possible to do that by forking Bitcoin. But after I left finance, then I realized that you can do the same thing with smart contracts, and you can do it a lot more easily. If you're using proof of work tokens, on the Ethereum blockchain, then that means that the security is taken care of by Ethereum. I don't need to worry about 51% attacks. I can just have it so that people do the work, they get a token, or they get a batch of tokens, a reward, a mining reward, and that is basically enough. I don't need to worry about security. It can survive even if the amount of mining power is very, very small. We still don't have to worry about attacks. And also, when you use smart contracts, the amount of code is so much smaller. With Bitcoin, it was a massive amount of code. I realized it was impossible to maintain. I wasn't going to be able to do this, especially like incorporating patches from the Bitcoin source code when they need to change it and so on. It would be just too hard. But if you're doing it on Ethereum, you can use smart contracts. I was able to write basically something like 280 lines of code and do the entire basic project with that. So each token is a smart contract with about 280 lines of code, and it's very, very easy, and it's very secure. So
I think we have very different definitions of what very easy is.
Yes. Yeah, it took work. It's maybe it was a lot of work to start, but it's easy to maintain because it's actually impossible to maintain. You can't change a smart contract after it's been deployed. Right. So basically, that means that all the maintenance work is done for me because I don't have any ability to do it.
So you took your experience in physics, you translated that into finance. I've never actually met a quant. I've seen them talked about on TV on shows like Billions, for example, but I didn't know that they were real people. But then you also have coding experience, or you've gathered enough of it to be able to actually apply all of your learned knowledge in the finance sector and then create your own project with it.
Absolutely.
It's a pretty wild story.
I guess so. Yeah.
So, okay, the cycles, I get, makes sense. If there's no volatility, or there's like, one big spike a year, it's not really good for traders or algorithms because everyone's going to be chasing that single peak, right? So the idea, and I'm probably not going to do it justice, and feel free to jump in on it, behind seasonal tokens is that you've created 4 separate tokens, all mineable on their ERC20 tokens, that have their own separate halving cycles. So for our listeners, Bitcoin goes through a halving cycle roughly every 4 years or so, where the difficulty increases on the mining side of things, which then also reduces the output or number of Bitcoin that earned for the miners. So you sort of emulated that, but 4 times over, and then staggered them so that there's constant cycles going on throughout the project.
Absolutely. Yeah. You just explained it more.
Done and dusted. All right, good. Podcast over. 6 minutes in. We're good to go. No, so tell me about it. Like, I'm curious, like, you've written this code, you've got this idea, like, it's just an idea though. How do you know this is actually going to play out the way you think it's going to in the real world?
Right. Yeah. So getting the certainty and the clarity of it was really the big part of it, because what I was thinking when I had the idea, and I'm thinking, okay, what I was really doing actually was I was looking at Bitcoin and I was saying, okay, it's 2019 and I can see the cycles. By then it was clear the 4-year cycle pattern in Bitcoin was relatively clear, and it was kind of understandable. Okay, there's going to be a halving in 2020, and that means 2021 is going to be a good year for Bitcoin, and 2022 is going to be a bad year for Bitcoin. And I was thinking, what am I going to do?
Story checks out.
Yeah. What am I going to do in 2022? And this is 2019, so I had some time to think about it. So I thought, okay, well, if I was to create another cryptocurrency that was like Bitcoin, that started to go up when Bitcoin started to go down, then I could switch my Bitcoins to this other cryptocurrency. It would go up, and then I wouldn't have to suffer from this bear market that Bitcoin goes through during a part of its cycle. And then I realized, okay, what you really want is multiple cryptocurrencies that cover the whole cycle. So you want 4 cryptocurrencies that are going up and down one after another, and that would be essentially ideal. So I tried to figure out how could I do this, and you can't really do it by forking the Bitcoin code. It's too resource intensive, but you can do it with ERC20 tokens. And so OX Bitcoin was the breakthrough technology that was in 2018, and it basically showed how you can have proof of work mining with ERC20 tokens. So I was able to take the technology basically from OX Bitcoin, and I was able to make 4 copies of it. I was able to stagger the rates of production or the halvings, so that you will have this the same seasonality that you have in the Bitcoin price. We can have it in each of these tokens, but it will be staggered, so you can switch from one to the next, and then you can increase the value of the investment over time. And
No, sorry, I didn't mean to interrupt. I think the idea makes sense, right? I think we see this a lot in low cap coins where they'll ride one up and then they'll try to jump to the next one, and then there's a 50% chance they get rug pulled while doing it. But there's no safety in it, right? So to be able to just work within one ecosystem of tokens to actually trade and swing trade in the way that you want to feels good, right? You guys really lower your risk of getting damaged in terms of scams and that sort of thing by doing it this way.
Absolutely, yeah, and we've tried to when I was looking at Bitcoin, it's going to go on until 2140, I think, is the year when Bitcoin mining will finally end, and I thought, okay, we really want a long-term good investment. We want the rate of production of these tokens to be decreasing over time, like it is with Bitcoin, because the price of Bitcoin has gone up so much because people know that it's becoming more expensive over time. It's becoming harder to obtain. The rate of production is decreasing, and Bitcoins are going to be scarcer in the future than they are today. So that's why it's basically always a good idea to buy Bitcoins today rather than in the future, because they're going to be more expensive or at least more difficult to obtain in the future. So I wanted to take the same ideas, and but what I found I had been investing in Bitcoin, and what I found was that, like, okay, it goes through these cycles, and it's very depressing when the price goes down. When you go into the bear market, it brings the whole crypto market down with it, and it's very depressing for everyone, basically. So the question was, how can you escape from this? And essentially, staggering these cycles seemed like the way to do it. And also, so this is, when you do this, it creates what's called seasonal investing. I mean, it's already a widely used. If you Google seasonal investing, you'll find there are lots of effort and lots of money devoted to this. Lots of people are interested in it. But what seasonal investors want are assets with like multiple assets with complementary kind of staggered seasonality in their prices. And I guess the classic example would be if orange juice is more expensive in the winter, and then real estate is more expensive in the summer. So if you trade real estate for orange juice in the summer and then trade orange juice for real estate in the winter, then you'd have a portfolio, or the value of your investment would continue to grow over time. You'd get more and more orange juice and more real estate as time went on. But the problem with that is that if you actually try to do that, you realize real estate and orange juice are actually kind of hard to trade electronically. If you want to trade real estate electronically, you can't really sell actual properties or buy or sell. What you need to do is you invest in real estate investment trusts. You buy a share in these companies, real estate investment trusts, and that's supposed to be a proxy for the real estate price. But it doesn't have the same seasonality as real estate itself. And if you want to do the same thing with orange juice, then you would buy orange juice futures. And these have deliveries, that they have dates for delivery. So if you want to get orange juice for delivery in the winter, it's more expensive than orange juice with summer delivery. And that means that you can't act. There's no financial instrument that goes up and down with the seasonality that orange juice itself has. So the idea is that if you had an ideal investment for this kind of investing strategy, or an ideal class of assets, they would be electronically tradable like stocks. And but it would also have the strong seasonality that you have in commodity prices. And there's just basically nothing like that on the market already. But with cryptocurrencies, with proof of work mining, it is possible to basically create the seasonality. We can do what Bitcoin does. Bitcoin has its seasonality. We can take copies of that, and we can make investment assets that have seasonality in their prices, and we can use cryptocurrencies, and they're automatically electronically tradable. So that was kind of basically, I don't know, essentially the basic idea behind the whole project.
Yeah, it's a form of sector rotation, right? And trying to follow the cycles of any given market, but you don't have to worry about taking delivery of 3 containers worth of orange juice to do it. So
exactly. yes.
I heard a story once, and I don't know if it's true, but a guy, he bet on squash futures and didn't realize how to do it properly, and ended up getting like 3 containers of squashes delivered to his house.
Oh no! Yeah.
Can't imagine.
That's what happens if you do it wrong.
Can't imagine. Okay, so we've talked about a few things, and I want to sort of dive in on a few of them, but let's start with mining. So we brought it up a couple times. Obviously, Bitcoin, very mineable token, but has the ETH merge sort of disrupted your mining at all, or does it work in the background regardless?
Yeah, the ETH merge hasn't made any effect on us. So we have smart contracts that are on the Ethereum blockchain, and each of them receives a proof of work from a miner and then issues new tokens. But the ETH chain changed from proof of work to proof of stake, but that didn't change the operation of any of the smart contracts. So our smart contracts behave exactly as they did before. They don't even notice basically that ETH has changed from proof of work.
Okay, so anyone that has any sort of mining equipment, which is quite cheap right now because the markets are, in such dire straits, can take advantage of it, set them up, and start mining your tokens. I believe that on your website, actually, you give the links on how to do all of that as well.
Absolutely, yeah. So we have the instructions. The difficulty, I guess, is that you can mine them with GPUs, with graphics cards, and some people are still doing that. But the problem is that there are ASICs or FPGAs. They're basically more advanced machines that are on the market. And if you have one of these more advanced machines, then you can outcompete people who are mining with graphics cards. So if you really want to mine, then you'd have to buy, there's a website called hashaltcoin.com. They sell a miner called the F1 Plus, which I think is the best miner on the market at the moment. If somebody has one of those, then the amount that they'll have to pay for electricity to mine a certain number of tokens is so much smaller than you would have to pay with the graphics cards that it's somebody who wants to mine seriously is going to end up doing that. And they're very noisy machines.
It was interesting last year to sort of watch the cycle and the prices of those machines follow the market. Like that's almost an entire separate market on its own. I had a bunch of friends that were piling into Bobcat miners to mine helium last year. And it was a profitable investment for a long time, right? So that's okay. Yeah. That's good. So mining continues then, halving every 4 years. You've got the seasonal tokens. So you've got spring, summer, fall, and winter. Those are the 4 tokens. Do those follow our seasons, or are they in their own seasons? How does that work?
I think I'll let Sam answer this question.
Sure, Sam.
No, so they're not following our seasons.
What about Australian seasons?
Yeah, if the country doesn't have 4 seasons, then they can't invest. They can't get involved in this project. No, it's not like that at all. It's just very easy to understand the premise of the project. If you can see, there's 4 different tokens. They've got their own mining schedule, halvening schedule. So that's just an easy way of acknowledging it when you look at it, right? So it doesn't follow any particular season pattern. The halvenings happen every 9 months between the tokens. We're having our summer halvening very soon. That's happening in March. So we've already had our spring halvening. So it's just like I said, it's a very easy, representable way of understanding the concept of the project.
Makes sense. I'll pull up a chart in a little while when we dig into sort of the specifics of it. But mining isn't the only way that you can procure this token, aside from just buying it off of, I think you're on a couple smaller exchanges, and Uniswap basically is where to buy the tokens, right?
Yeah, essentially Uniswap. You can do it inside MetaMask. That's probably the easiest way to do it. And there have been lately, since the merge happened, there's been front-running bots that have taken advantage of the merge and are now trying to front-run orders on Uniswap. But if you do a trade inside MetaMask, then it's able to submit it directly to the stakers, and it doesn't get publicly broadcast, so nobody has a chance to front-run it.
Interesting.
That's actually the easiest.
I'm a big fan of MetaMask Swap. I use it all the time, actually. It works really well. So, okay, good advice. Yeah. But you can farm your token, too, is where I was sort of headed with it. And I read through all the docs on and I understand you're basically pairing it with ETH and providing liquidity to Uniswap, but how am I rewarded in whatever seasonal token I happen to be providing liquidity for?
Right. So what happens is that there are miners who are mining the tokens, and they're using the mining pool, and they give a contribution to the farm, essentially, that's taken from their mining profits. Well, their mining income, I guess, from the mining pool. And it was 9% that was being distributed. All of this was being distributed to the Uniswap farm, where people who were basically providing liquidity on Uniswap, at aggregate, they were getting 9% of all of the tokens that were mined. Now we've got 2 farms. There's one on Polygon, and there's one on there's one on Polygon and there's one on Ethereum. And the 4.5% now of all the tokens that are mined every day are distributed to people who are using the 2 farms. So if you're farming on Ethereum, then there's a 1% fee for all the transactions that happen on Ethereum, and that gets distributed to the farmers as well. So if you're farming on Ethereum, then you have 2 sources of income, basically, which is the transaction fees and also the farm income donated by the miners. But if you're mining on Polygon, then the only real thing that you get is the income from the miners, because the idea of using Polygon is to make it frictionless. We don't want people to have to pay transaction fees at all. So we took the lowest fee rate that was available on Uniswap, which is 0.01%. So basically, you're paying no transaction fees, and you're paying no gas fees if you're doing your trades on Polygon. So we have kind of two systems now, one of which is got more liquidity, which is on Ethereum, and it just got like a larger trade volume. And there's also, if for people who want to just do trades with as little friction as possible, they can do that on Polygon.
That makes sense. I'm a big fan of Polygon. I think it's got a pretty bright future. I think a lot of people are realizing the scalability and then the cost associated with doing business on ETH. And I think more and more stuff's going to migrate over that way. So good to know that you're thinking about that. On the farming side, so I was a degenerate BSC shit farmer for a while. It's kind of that way. I landed in DeFi in the first place in summer 2021, where it was anything with a big cat or food, I was in it. But what I experienced when doing that was impermanent loss, right? I think a lot of people don't factor impermanent loss into their calculations when they're trying to figure out yield based on their LP token. So I guess my question is kind of specific, but you see this cyclical price action. The farmers see it too. Sort of is there risk involved in them like unpairing their liquidity at the top, so to speak, and then moving to the next token? Like, how do you maintain a balance in the liquidity pools across the 4 tokens?
Yeah, that's actually a really good question. So what we have is, the simplest mechanism that we have is that when people put tokens into the farm, or when they provide tokens as liquidity to Uniswap, and then they put their liquidity position into the farm, then they can't take it out for 30 days. And then there's a 7-day window when they can take it out, and then another 30-day window when they can't. So it means that the different farmers have these kind of different sliding windows for when they're able to make their withdrawals. And if there's a panic in the market, or if there's a time when all of the farmers want to withdraw the liquidity at the same time, then only 20%, approximately like 7 divided by 37, only about 20% of all the liquidity can be taken out at once. And the other farmers are going to have to wait for a few weeks until their window appears before they can withdraw. So that means that it's kind of automatically got this thing that only a certain amount of liquidity can go out and go in, in specific eras and so on. And if somebody is farming, they're kind of by locking their tokens up for 30 days, they're kind of saying, okay, I'm giving up the ability to trade tokens for more tokens during that 30 days. I'm not going to be able to take advantage of the seasonality. I'm going to have to just leave my tokens there. And so, but after the 30 days, they can change their mind if they want. So essentially, there's a balance between different styles of investing. If you want to invest by doing farming, you can do it for a while, and you can switch to trading tokens for more tokens, taking advantage of the seasonality, but you can't do both at once.
Got it. Makes sense. It seems like you've sort of considered all factors when it comes to balancing this out to actually make sure that cycles are maintained. But I'm going to pull up the chart just quickly to kind of show our audience what we've actually been talking about here. So this is a bit of a spaghetti chart, but it kind of shows you can talk through this better than I, because I can't really read exactly which token we're talking about here, but this is the price action of the various tokens and how they move against each other, which is really the whole idea, because you want to be swinging from one to the other as these cycles move forward, right? Is that
absolutely? Okay. Yeah. So so anybody who's looking at the chart, you can see it. So winter is the blue one. It was the most expensive up until June of 2022, which was when we had the spring halving, and spring was the cheapest up until then. And then after the halving in June of 2022. The rate of production of spring was cut in half, and it became the hardest token to produce, where it was previously the easiest. Previously it was produced at the fastest rate, and after that it was produced at the slowest rate. And you can see that after that happened, spring became the most expensive token, and it took a few months. We actually measured it. We've got some dotted lines in the charts there to indicate kind of theoretical prices, and that's based on the hypothesis that the prices are moving 1% per day towards the ratio of the amount of times that it takes to produce them. So the idea is if a token takes twice as long to produce, you could expect its market price to be twice as large. And that seems to be how the prices have behaved. And we didn't know before the halving exactly how fast the market would respond, but it's responded about 1% per day. The prices move about 1% per day towards the ratio of the times that it takes to produce them. So with spring being the easiest or the fastest produced, early on it was the cheapest, and then it became the most expensive. And that's going to keep happening. The idea is these prices will keep cycling around each other. So somebody who traded winter tokens for spring tokens before the halving would have gotten more tokens in total. They get about 60% approximately more tokens in total. And now after the halving, you get about 20% more tokens if you traded your spring tokens back for winter. So if you had just held onto your winter tokens, then you would have the same number of winter tokens as you had at the beginning. But if you traded them for spring before the halving and then traded them from spring back to winter after the halving, then you'd have more tokens than you started with. So eventually, that makes sense. Yeah.
So you don't even need to trade all four. You could pick a couple and follow that cycle and move through.
You can do that, yeah, but it will always be the cheapest token becoming the most expensive one.
Right. So summer's next on the dock to take over as the most expensive token, and that's because the rate of emission is slowing after the halving.
Absolutely, yeah. That's
Got it. Yeah, it's a very, very unique model. I haven't seen anything like this before, and it's definitely interesting. So I think you've covered it all. I am curious. I'm gonna just pull this off the screen here, but Sam, I want to bring you into the conversation because clearly we have a genius. We have a genius developer that has thought of all angles. But you and I both know, being sort of in the trenches of the crypto world, that genius alone does not make a successful project, and a big part of it is marketing, it's community engagement, and that sort of thing. So how are you going about that with seasonal tokens?
So actually I've been in the team now for well over a year. I nearly joined at inception, and Ruan actually brought me in initially to ask me that exact same question you just asked me: how are we going to do X, Y, Z regarding community and moving forward with marketing, right? So we faced ourselves with, it was a limited team at the time, and we knew what we needed to do to expand the viewpoint. So we created a Discord server, we created a team effectively. Our team's now 14 strong behind the scenes. That's where I spend most of my time effectively. So community-wise, we've got a big bustling Discord server. The team are always active over there, and we're always working on that at the time. But we've also got a lot of upcoming projects that are tied in with seasonal tokens, which I can't go into too much detail yet, but they're going to be rolled out soon, and all the information is dropped on our Discord server. But regarding marketing, for example, these projects do tie into that marketing overarching angle that we're going for. And we actually have a dedicated marketer who's been on the team now for, I think it's been about a year as well, or 8 months at least, that this marketer has been worked full-time on seasonal tokens. He's also quite well known in the space. And he's also like on our LinkedIn page. So if you look on our website, you can see all of us on LinkedIn. But outside of that, so we're pushing forward now. Obviously, the summer halving's coming up soon, and I think a lot of attention is going to be back on that now, especially now that the market in general is picking up quite a lot. So the next steps for us really is to get the Telegram established, because we've always been Discord based and Twitter. We're going to establish the Telegram group, and we're going to just go from there effectively. Our marketers already put a campaign together on how we can push certain things and how we can get it's not necessarily getting the word of seasonal tokens out. It obviously is, but it's mainly prioritizing the fact that we've got empirical data now of the past of how these trades have worked and how the prices worked. So we actually have that backing us up. We can clearly see the evidence of how it works. And now we have this summer halving coming up. So now is the best time to focus on that and get more eyes on the project before it halves effectively.
No, I like that. I like that a lot. And I think the track record is important here, because you could have launched this and everyone would be basically gambling on, will it work? But now you have, almost 18 months of here it is working, and you can kind of showcase that it is fluctuating in the cycles that you kind of thought it would, plus or minus a couple months or whatever the cycle ends up looking like. But the mechanics are working, right?
You can see the theoretical prices that Ruan put together. Except for the massive spring, we couldn't anticipate what spring would do after the halving. But if you look at the chart, obviously, if anyone had a second ago, you can see it goes crazy past the theoretical prices. So there's always going to be that level of nuance where we can't predict every single part of the market. But outside of that, the theoretical prices have been extremely consistent. That is effectively what we're witnessing. So
I think the funny thing about this is you've literally given people the roadmap. You've told them what's going to happen on the cycle, and still they fucking FOMO in right up to the top. Like people should have been acquiring spring when it was down here, not up here, right? So you just can't. Humans are going to be humans, right?
They're going to be humans, but now in the future, when summer halves, people are going to look back at that and say, well, what's going to happen now, right? So as we build it more and more months under our belt and more halvings happen, bear in mind, this is going to go on effectively forever. People can clearly see how it will work, So
it's good to bring a track record, because I think it sucks in this market, because you watch absolute dog shit projects just shoot off to 100+ million market cap with no utility, no plan, no anything. And then you bring on quality people that have really thought this through and trying to give people a solid investment vehicle. And those are the projects that struggle to gain traction in this type of market, right? So it's a battle, right?
When it does, they you can't stop it once they do, right? It's one of those. and that's the slow burner. But the whole ethos of seasonal tokens is that it will take time to show that evidence. But now we've spent 18 months doing it. We have that evidence now. There's consistency there. The evidence is all there. It's all on our website. Like you rightly said, we've shown people the theoretical prices and how things should get. We've explained how everything works, and now we've got the evidence to back it up, right? So,
well, and I think it's not about, a moonshot token. It's about all tokens moving in relation to each other and how you play those angles, which I think is a lot more interesting than just, sit there and hold on for your 100x, right?
Yeah. I mean, you could do that. Cool. Obviously, long term, these will, in theory, keep going up, right? But obviously, trading tokens for more tokens in that cycle is going to be your net win.
Totally. Max supply, is it different per token, or is it the same across the board?
It's scheduled to be about 33 million tokens of each type, but there's a slight complication because it's not done exactly the same way that Bitcoin is done. With Bitcoin, if the halvings occur when a certain number of coins have been produced, and Bitcoin is able to guarantee that there'll be exactly 21 million tokens and never any more, never any less. But the cost of that for Bitcoin is that the times of the halvings need to shift backwards and forwards depending on the hash rate. So if Bitcoins are produced ahead of schedule, then the Bitcoin halving happens ahead of schedule. With us, we don't have the ability to let the tokens do that, because if they were to do that, then their schedules would shift around, and we wouldn't always have like a 9-month gap between one halving and the next. It could be the case that the halvings will all drift together to the same time. So we needed to basically change the model from the way that Bitcoin does it, and instead say, okay, the halvings are going to happen on schedule, exactly when they're supposed to happen, and it doesn't matter whether there are more tokens or fewer tokens produced. Like if it's ahead of schedule or behind schedule, the halving is going to happen on time anyway. So the result of that is that we can't absolutely guarantee the final number of tokens, but we think that it's going to be somewhere around 35 million, possibly 36 million tokens of each type in total. But essentially, we can't guarantee it down to the exact number, but we can get it to within a few million.
No, but I think the important thing for the audience is that there is a fixed quantity, plus or minus in the end. And so it's not an inflationary farm token like most people are used to with any sort of, DEX farming, right? It's not going to go on forever.
Oh yeah, absolutely not. They're actually running out relatively quickly. It's like with Bitcoin, it's a 4 years for every halving. With each of the seasonal tokens, there's a halving after 3 years. So it's going to run out slightly faster than Bitcoin is.
So you'll see that same sort of split in the price action and the cycles. It'll just keep going up and up and up in price potentially. I mean, obviously not financial advice. You can give all the financial advice you want. You're the super finance guy, but
right. I can't make any guarantees. I can't make any promises. I'm not accepting personal liability.
I understand.
But I can say that basically this is how the economics works. They're going to be harder to obtain in the future. That's pretty certain.
I'm curious, just generally speaking, based on your finance experience, how much of this is just based on human psychology? Like, you must have sort of analyzed markets from every possible angle. And from my perspective, which is a layperson, basically, a lot of it seems emotional, or at least, semi-emotional.
Absolutely, yeah. So I think there are two kind of major forces in the market that interact with each other, and most of the time it's psychology. What happens is there's a price and it drifts up and down, and the assets are doing price discovery. They're like, the price goes up too high, and then the market can't support it, and then it goes down, and people realize, that price was too high, and then it goes down too low, and then that can't be supported. So the prices are kind of going up and down, and most of the time they're in this regime where psychology is dominating it. People's anticipation that the price will go up is what pushes it up, or people's anticipation that it will go down pushes it down. But that's kind of within bounds, because there's also economics. And what happens is that if the price goes down too low, then it's essentially people thinking, oh, well, there's going to be lots of tokens available at low prices, and it's going to be possible to buy millions of tokens at low price. And that's just not true. When the supply is limited, then eventually they run out. So the price kind of goes up and down, driven by psychology, and then it encounters economics, and it bounces back, and it has to react to reality, because something runs out. Like either the amount of money that people can pay for this thing runs out if it's going too high, or the number of tokens themselves runs out if it's going too low. So it's kind of they're both very powerful forces, but the force that's kind of mostly dominating day-to-day price movements is psychology. But every now and then there's what's called a market correction, which is where everybody has to change their psychology because suddenly the tokens have run out.
I think people get locked into their own sort of narrative, or they're so convinced their hypothesis is right that sometimes they just can't zoom out a little bit and see what's actually going on. But I mean, so take the price of Bitcoin today. It's what, like 22.7-ish at time of recording here. Everyone's back, right?
Right.
You have Bitcoin at 15K and nobody gives a shit. Everybody leaves Telegram and Discord, and then 22.7, they're like, whoa, I should be buying now. It's like, well, you could have
Right.
been up 40% already if you had just stuck around, right? But people have a hard time with that. And you see it even in social engagement, like via Twitter or YouTube or whatever your space is. I mean, this is the moment to be accumulating. This is the moment to be building whatever you're building, because it will come. Your time will come. You just have to be patient with it. So I don't know. People are going to try, right? They're going to try and swing these seasonal tokens and see what they can do, but not everybody's going to win out because they just can't control their emotions in it.
I'm afraid so. Yeah, yeah. It's actually kind of like when I was creating this thing, what I really wanted to do was to create a system in which it was possible to kind of eliminate the risk of loss as much as possible. So we have the rule, like if you trade tokens for more like trade like 3 spring tokens for 5 summer tokens, you'll have more tokens in total afterwards, and then the total number of tokens in your investment will always go up and never go down as long as you stick to that rule. So that's like a way to eliminate the risk of making a loss eliminate the risk of making a loss measured in tokens, but to eliminate the risk of making a loss measured in dollars is basically impossible. I can't guarantee future prices. And what is going to happen is that people are going to get very excited at some point. They're going to buy at the top, and then the price will go down, and they're going to sell the same tokens that they bought for a lower price, and they're going to make a loss. And I can't stop that. I wish there was a way to design a cryptocurrency where people would never make a loss. But unfortunately, like the price in dollars is just uncontrollable. It depends on the economy and popularity of the project and all these things, and I can't control. And people they tend to move in herds. They all buy at the same time, and they push the price up, and then lots of people buy at the top, and then they all sell at the same time, and then there are losses. I wish that didn't happen, but it happens in every asset class. It's not just cryptocurrencies.
You know what, though? So when I first got into crypto and I sort of got into the idea of trading, I'd always been interested in trading, but never really had an easy way to do it. And now I can trade futures on my phone, for God's sake. Like, it's so much simpler to do that. But it was a really big mindset shift for me to learn to not think in terms of USDT or US dollars, right? To think about it in token quantity and to stop looking even at the USDT pairs on a lot of these trading things. If you look at them in terms of Bitcoin or ETH or one of the other majors that you might be interested in accumulating, it really reframes sort of what you're actually trying to achieve here. Because if you're confident in those are going to rise over time, that's what you want more of. It doesn't matter what the US dollar value is right now. So it's a hard thing for people to rationalize when they think that they're taking a loss when they're actually acquiring more tokens that will result in the gain down the line.
Absolutely, yeah, it's true. And another thing that's related to that is that if you're looking at a price chart in USD in US dollars, like if you look at the price of Bitcoin in US dollars or Litecoin, it's very when one of these halvings happens, it's very hard to see any immediate effect. It looks like there's nothing happening. It looks like the price is already going up and down with a certain amount of volatility, and you can't really see any clear pattern. And it's only after you have years of data that you can look back, then you can actually see the cycles in the prices. But the fact that it's US dollars means that it's tied into the whole economy. It means that the amount of money that people have to spend, all of the other factors that affect the economy are basically affecting that price chart. But what we have with seasonal tokens is because we have 4 tokens that are pretty much identical, like spring tokens and winter tokens, summer tokens, they're almost the same except for the rates of production. And so if you compare the price of spring to the price of winter, then you get a very clear chart. Basically the chart that's already been shown. You can see the effect of the halving very, very clearly. It happened quickly, and it only took a few months for spring to become the most expensive token where it was previously the cheapest. And that's essentially because there are no complicating factors. It's not measured in US dollars. If those were dollar charts, dollar price charts, then the prices would be going up and down. It would be very hard to see any pattern. But because we can isolate basically all the other effects of the economy and say now we're just comparing spring to winter, then that means that it's actually easy to see the result.
Oh, it makes sense in my eyes. But hopefully our audience can sort of wrap their head around it and just try to think about things a little bit differently. There's a reason that all of those alternative pairs exist on your exchanges, and it's so that you can, really accumulate the assets that you're trying to. Because I think a lot of people they took US dollar losses on a lot of shit last year or the last 18 months when the price is going down, where if they literally just ignored that line and just parked it, they'd be either up or flat right now, right? So
Absolutely.
it's difficult. It's not easy, but it's something that they need to try and do. Now I'm curious, are these? I'll reframe. There's a lot of demand for utility with any project right now out there in the space. So I think even if roadmaps didn't initially include, super useful ideas for the token, investors are demanding a little bit more of their teams right now. So I'm curious about any sort of future development, if there's anything for the seasonal tokens coming.
Sure. So can I? Okay, I'm going to take a chance to kind of push back a little bit against the
Sure.
utility here. So what I found is that like it's almost everybody in the world who's looking at investing in tokens or investing in cryptocurrencies is asking the same question: what's the utility and what can they be used for? So I'm going to if it's okay, I want to give a quote here. This is from Adam Smith from the Wealth of Nations. This was written in 1776, and so here's what he says. He says, the word value has two different meanings and sometimes expresses the utility of some particular object and sometimes the power of purchasing goods. One may be called value in use, the other value in exchange. The things which have the greatest value in use frequently have little or no value in exchange. And on the contrary, those which have the greatest value in exchange frequently have little or no use. Nothing is more useful than water, but it will purchase scarcely anything. Scarcely anything can be had in exchange for it. A diamond, on the contrary, has scarcely any use, but a very great quantity of other goods can be had in exchange for it. And so he explains this a little bit more. He says the real price of everything, what everything costs to the man who wants to acquire it, is the toil and trouble of acquiring it. Okay, so what I'm kind of trying to emphasize here is that a lot of people think that if it's more useful, it's going to be more expensive. But in fact, that's the opposite of what we say. It's in fact utility is really not what determines the price. What determines the price more is scarcity. And the reason why diamonds are much more expensive than water is because it's just harder to obtain diamonds than it is to obtain water. Water is plentiful and diamonds are scarce. And if somebody was to look at diamonds and water as potential cryptocurrencies, they'd say, oh yes, water is going to be the very expensive one. But in fact, that's not how it works in reality. That's only looking at the demand side of the effect on the price. But the supply actually has a overwhelming effect on the price, much larger than the demand. So, or certainly larger than the utility. So with Bitcoin, for example, it's really the fact that Bitcoin is becoming scarcer over time. This is why the price is going up. And that's why people buy it. That's why it reached $1 trillion market cap. It wasn't because it was useful for payments. Like the utility of Bitcoin is you can make payments, but basically it's not competing with Visa and MasterCard. Bitcoin is not like dominating the payments industry, but it has become like it has had a huge amount of demand because of investment, and that's because of its price rising in value, and that's because of the scarcity. So it's really the supply rather than the utility that actually determines the price in the long term. So even though people would like to say, what I could do is I could say, people want the tokens to have another use. I'll write a computer game where they can be used to buy virtual items. Okay, now if I did that, would it really affect the price? I don't think it would have any effect on the price.
I was actually just going to bring up play to earn gaming as sort of the example of that, because it's, you're absolutely right. I think it's I think it's in the investor's mindset, and I'll use air quotes on the investors because a lot of crypto investors aren't like truly investors. They're there to try and gamble a little bit realistically. Yeah, exactly. I think it's more of proof of development from the team, show of effort more than anything. But I agree with you. I mean, you even look at like a token like Stellar Lumens, which I really like. Use it all the time to move my shit back and forth wherever it's got to go. Never hold it. Ever. And you got to see it in the price, right? It's relatively stable, and it never really goes 100x like a lot of these other ones do that are a little more scarce and a little less used. So it's a good thought.
Absolutely, yeah.
You've given me something to think about. That's good. But okay, so that's fine. At least you know what you are. You're upfront about it, and you're not making like I'm not going to make a an arcade game or something like that with these tokens because you don't think it'll bring value, and that's fine. There's a lot of people that tried that, right?
Yeah, they've tried it, and to be honest, I don't think it's worked that well. I think there's a lot of VCs. They look at tokens. They say, is it useful, and if it is useful, they think, well, it's going to be valuable, and it really hasn't worked out that way. So I think. Well, also I think that what we've done with seasonal tokens is we've basically, a lot of people who are looking for investment in a new project are saying, we help us get off the ground. We have a great idea. We want to make it a reality. And we haven't done that. We didn't take money. We didn't borrow any money. We didn't take investment. We didn't start a corporation. We created the tokens. We did it ourselves. And now they exist. And essentially the hard work has been done. Now they exist. Insofar as a roadmap, it would make sense to ask us, like, what are you planning to do when our plans actually had an effect on the future of the tokens? But now that they already exist, what we plan to do will have I don't have any control over the tokens. The contracts are launched. I'm not in control of them. They're commodities. It's not actually a business that's making a profit. So it would make sense to go to a business and say, what are you going to do in the future to make a profit? But I have no intention of starting a business, and I have no intention of making a profit other than just accumulating tokens over time. And I know that the tokens are becoming harder to obtain. At some point in the future, I'll have a lot of tokens, and everybody else will find it very difficult to get tokens. And if they want tokens, they're going to have to buy them from existing investors, because the rate of production for mining is going to decrease and decrease. So today, you can get 1 million tokens from miners. You can buy them 1 million tokens from miners within a year. But 10 years from now, that's basically not going to be possible. If you want to buy 1 million tokens 10 years from now, you're going to have to go to people who already have them and say, can I buy them from you?
That's such an uncommon way to launch a project these days, and refreshing, in all honesty, because I think a lot of people get caught up in the pre-sale, and then they basically take payment in advance for services not yet rendered, and then whether or not those actually happen is another question, or on what timeline, right? So here you are quietly working in the background, said, F it, let's go, and then renounce the contracts and send it out into the world, and just watch to see what happens. So I think that's cool. I respect that a lot.
Thank you. Yeah. And another motivation for this is that I don't want any liability. I don't want to make anybody any promises. I just want to turn this on and set the system going. I don't want to, promise investors that they're going to get profits and take investment and say, I promise you will get your money back. If I had done that, I would be under a lot of stress, and it would be very unpleasant.
Yeah, no, I've definitely been in that situation and working with other, not that I've promised profits, but you feel some sort of responsibility, right? The weight of it all, like I've created this and I've brought all these people in, and then now they should be rewarded for believing in me, but the market had other plans, which is never a good situation. But
exactly,
so you're basically set up, right? I don't think there's a bull run happening this year. I don't believe this Bitcoin price action right now. I think there's no economic foundation for it to, rise well beyond where we are now. So we're probably got some time, but your cycles are sort of counter-cyclical to Bitcoin, so to speak, to give yourself, something to trade in the meantime, right?
Absolutely, yeah. So if once every 9 months there's another halving. So there was one in June of last year. There'll be one coming up in March, and then at December of this year there'll be another one. So it's happening more frequently. You don't have to wait 4 years like you do with Bitcoin.
Very cool. Very cool. Sam, I know you've been pretty quiet throughout this one, but I want to give you a chance. What else you got going on the seasonal tokens?
Sorry, I think at one point my speaker started acting up as well, so I muted myself to leave myself out of the
it's all good.
Out of the conversation, not to drown everybody out with the sound. So obviously, like we said, summer halving's coming up, and there's going to be a lot of eyes on that. What we want to do now really is to set the foundation for people to be able to discuss it on different mediums rather than just Discord. So obviously, Discord's been live for over a year now. But we want to get Telegram branched out into as well. And we want to start also interacting with more people on Twitter and Twitter Spaces as well. I think, I remember when we talked about this project, you were like, this is a lot to take in, but I see what you're talking about here. It makes sense, right? But it takes a level of, bringing it out there for people to get that part in their heads. Oh, hang on, this is 4 tokens, it's cyclical, it's similar to Bitcoin, but it's different. You have to try and get that across to people quite streamlined, right? And that's what we're trying to work towards now. So we'll have a lot more Twitter Spaces going on in the future. We've just launched our socials as well. We've launched separate socials that are also similarly linked to seasonal tokens. And we've got Telegram that's coming out now as well. And like I said, our marketer, he's working around the clock to make this more visible to people across the board. So that's going to be going on effectively. It's already started.
Yeah, it's been interesting to watch Twitter Spaces in particular sort of take over as the main source of information in the crypto space. I know I've been joining way more than I used to ever since I started this podcast, and you meet a lot of interesting people, and you never know who's going to be listening in, right? So
you truly do. And the bigger you grow with that, the more the more people you reach in from separate industries completely, and suddenly everyone's horizon and their perspectives broaden massively. And that's why I really value Twitter right now as well, because it's becoming a centralized hub for all these different talks and different technological advancements within our own little. Rather than having native tribes for different tokens and different projects, all echo chambering around, now we're getting that bigger picture, and more people are able to interact with each other and actually see the value of different things they wouldn't even necessarily think they would like before. So that's going to be really good as well. But separately to that, Ruan's been on lots of different interviews as well. I've been on a few interviews as well. These are pretty much pumped out monthly at this point, but that should be continuing on as well. Really. So
yeah, you have your own podcast, don't you?
We do, yes, we do. It's just actually led by Polo, who's like the marketer I mentioned earlier. He's running out. I think we're on episode 27 now. It's been going on now, and it's like I said, it's reaching out to these people you wouldn't necessarily think would have an interest or necessarily have something to add, and suddenly, whoa, hang on, this person's a genius as well. Let's chat to them, let's talk about it, let's share some ideas, and let's broadcast that to everybody, right? So that he's smashing that. It's been really, really good to get involved with that, and I think we're going to continue those. That's on Spotify and such. That's going to continue on. But we're also now going to go into Twitter Spaces and just have more like a general conversation about macroeconomics, what's happening here, what's happening there, where seasonal at right now. But it's not centered around seasonal. It's just get people into a space, get chatting about what's going on, and obviously share some ideas. So there's a lot to look forward to. I think the next few months are going to be extremely exciting for seasonal tokens. So
I think general market talk is way more interesting to a lot of people than just specific coin talk. And when you sort of lock yourself in that echo chamber, as you said, it's a difficult thing to get out of, and it's almost creates sort of a toxic environment, especially in this situation where you've got 4 tokens that your entire community is going to be trying to swing trade through, and like someone's going to be someone else's exit liquidity. It's just the way it works in this game, right? So you don't want to foster a Discord or a Telegram of negativity because people are not trading as well as others. So I think it's good to have a balance and cast a wide net on this one to bring as many different folks in as possible.
Yeah, and just creating that dialogue in general. Our Discord's been extremely positive since the start. We've never had a problem. Everyone who's been invested, they've been there for the long haul. All amazing people so far. It's been one of the nicest communities I've had the pleasure of working with and establishing, and it's only getting better, really. So,
well, the fact that Ruan, you're the founder, and you're willing to come on and turn your camera on. I saw a YouTube interview, I think, of you in front of a NASDAQ sign. Like you're not shy from the camera, which is good, right? Because a lot of people would sit behind an avatar and not really show who they are.
Yeah, it's true. I really realized that okay, if I'm going to make this work, I'm going to have to do it. I'm going to have to put myself out there. There's just originally I was thinking to myself, okay, maybe I can get Sam to do all of the interviews, and I could just work on code, and I can just press buttons and get rich. But it doesn't work like that. You have to put yourself out there and explain what's going on. So
unfortunately, yes, I agree with that. It takes a village, and I think part of the success that I've had in the space is because I do exactly the same thing. I'm just willing to be who I am and turn my camera on and show people like I'm not here to fuck anybody over. I'm here to give you the best information that I've got on hand at the time. And if I make a mistake, I'll just put up my hand and say, sorry, pivot and move on. But I think it's commendable, right? I mean, I talk about this a lot on the show, but it bears repeating that, code isn't everything, right? With a traditional finance, we invest in people. You think about, a guy like Elon Musk, the businesses may or may not be like cash flow positive, and people will huck money at it because of the man, not because of the machine, right? So I don't think that's any different in the crypto space. And I think that the undoxed, private, secretive team, while they have a place, it's not in this space, like this particular space, in the sort of trusted ecosystem building, network development type people. So I think you guys have done well in that regard. So keep that up for sure.
You're spot on. The new leaders are now. Yeah, I think we mentioned this actually on our separate conversation. You are investing in people, and I think people have been burned so much now from just investing in just names of just random coins and just throwing their money at things without thinking about it, and then it's coming back to bite them in the ass now, effectively. So seeing who you're actually interacting with and who you're working with, or who's behind the curtain, as it were, it just adds that layer of confidence, and it does go a long way.
Totally. Well, Ruan, before we wrap today, anything else you want to share about the seasonal tokens that you think we didn't capture in the chat today?
That's a good question. To be honest, I think we've actually covered everything. I think it was all covered pretty well.
That's good. Well, then I'm forced to ask you the question that you may not want to answer, but I ask all my guests is, who is Ruan the man? What do you do when you're not nerding out on quant stuff or developing seasonal tokens or performing brain surgery or whatever else you do for on weekends?
that actually takes up all of my time nowadays. So
He's not lying.
No, I used to do a lot more things. Like I used to like surf the web and look at random news stories, and I used to like try to stay abreast of everything that was happening in cryptocurrency and so on. Now, like when FTX collapsed, I was like, "What's FTX?" I've been spending all of my time paying attention to this. So yeah, basically, it's become a full-time job. Even though I'm not being paid, I'm just doing this thinking it's a good project. Yeah. But yeah, it's what do I do? I feed my cat.
I've got one here in the background the whole time
as well.
Hey, maybe you're one of those rare individuals where your hobbies and your passions and your career have sort of merged into one, which isn't a bad thing, right? I think it's all what we strive for. So
yeah, it's actually been. I've had tremendous fun actually. This project has been the most fun thing probably that I've ever done. So yeah, it's been a lot of good.
That's great. Well, it comes through. You can tell the passion, you can tell the energy and the positivity. So I really appreciate you coming on. So thank you both. I mean, I know this was a quicker episode than normal, but I had a blast. So thanks for coming on.
That's brilliant. Thank you so much for having us. It's really, really good.
Always, Carl.
Right on. Come back in a few months after the halving, and we can look at the cycles and see what they look like.
That would be brilliant. Like absolutely.
Awesome. Take care, guys.
Take care, guys. Goodbye.
Wow, what a unique concept for a project. I've never seen mechanics like this, and I've never seen mechanics like this actually with a battle-tested track record of working the way that they are intended. So it was really interesting to speak directly with the founder, Ruan, and it was great to have Tears back on the show for the second time. So I appreciate your gentlemen's time, and thank you to the audience for sticking around with me right till the end. I appreciate it. You guys are the best. Thanks for hanging out with me. But I do need to make sure that you are subscribed to this channel, that you've liked this video, and that you've left a 5-star review on your favorite podcast app. The other way that you can support the show is through the MetaMask donation wallet that exists in the show notes below, or use one of the affiliate links that you find just below that. It goes to help keeping the lights on, and I'm hoping to upgrade the quality of the camera in the near future, so if you want to see me in high definition, that would be a way to make it happen. Capiche? Capiche. Thanks for tuning in, fam, and until next week, I'd like you to keep it rad. Later. The Rad DAO podcast is produced for entertainment and education purposes only. I know this because I'm not a licensed financial advisor. If you're thinking of investing in any of the tokens talked about during this episode, then I implore you to please do your own due diligence, and if necessary, consult with a licensed financial advisor.